Hi, everyone. Welcome to the latest Facts versus Feelings, Take 5 with Ryan and Sonu. Sonu, this one we're calling You're Downgraded.
Who's downgraded?
Yeah, who's downgraded is the question. I guess we're going to start high level. U.S. debt was downgraded last week by Fitch. We'll keep this very simple. Think about if you give somebody a loan, the odds of getting paid back. The U.S. was AAA, meaning it's darn near certain you're going to get your money back. They were taken down to AAA plus. Believe me, people still think the U.S. is good for it. But again, that's kind of what this means. Now, Sonu, how does this impact the listeners out there with this slight downgrade to U.S. debt by Fitch, a rating agency?
You know, the most dangerous words in this business is to say, it's never going to happen.
Yeah.
So never say never, right? But look, for the most part, I don't think it'll have an immediate impact or any there's nothing you have to go out and do or worry about, right? Mm-hmm. If you put money in the bank, if you buy a treasury bill, of course, you're going to get it back from the government, right? And to Ryan's point, Ryan, you just said, usually you lend somebody some money and, the rating agency tells you that whether they're good for it or how good they are for it, right? Now, if they're not as great, if the odds of them paying you back starts to fall, what do? You charge them more interest, right? Mm-hmm. So if anything, you would think, okay, Fitch has downgraded U.S. debt. This is the second time in history this has happened. The S&P did it about 12 years ago, almost to the day, right? Mm-hmm. First week of August. So, you think, okay, if U.S. debt has been downgraded, interest rates should go up, right? Because now you're less credible in terms of paying back the principal that somebody gives you, or paying back the loan that somebody gives you. So then you look at, okay, what's happening with Treasury interest rates, right? Now they have been going up, right? But I would argue that it's not because Fitch downgraded the debt. Rather, it's because economic growth has been pretty positive, right? You look at the last month, GDP growth was positive. You got some really good numbers. The economy has actually accelerated since then. We got a very good payroll report last week. Unemployment is close to 50-year lows. I mean, the economy is doing pretty well, right? Economic growth prospects are, pretty good. So you think, okay, in the future, I think what's happening in the bond market, investors are saying if growth is good, inflation's going to be slightly higher, which means the Fed has to keep interest rates higher. And so we're going to take yields, more than they were.
No, absolutely. You think about it, back to the debt downgrade. Was this a shock? Should we have seen it coming? Well, you mentioned there was one 12 years ago, so there's always another chance someone else was going to potentially downgrade the U.S. Debt. Also, about 3 months ago or so, Fitch actually put the United States on watch. They said, hey, you better get your act together. We're going to downgrade you. So I don't think it was a huge shock. Again, back in 2011 when this happened, the stock market had a very big sell-off, very volatile. This time is a little bit different from that point of view. Not surprisingly, Washington came out and the Fed came out, or not the Fed, Washington and the Treasury came out and said, hey, we don't agree with this. So believe me, there's lots of ways to look at it. But again, U.S. debt was downgraded. Might cause some indigestion, but bigger picture, the economy is really strong. Sonu, we've got about 90 seconds left. So that's about the downgrade. We're not overly concerned. We're still overweight equities. We still think we can avoid a recession. Let's talk maybe about earnings season, right? Earnings drive long-term stock gains. How's this earnings season looking? Because to me, I don't think Apple and an iPhone really care so much about the debt downgrade by Fitch, right?
No, exactly. And there's an irony in it that, Apple or, Microsoft is actually rated AAA, but the U.S. government is not rated AAA. So wait a minute, but, Microsoft saves all its money in U.S. dollars. How does that work, right? But anyway, coming to earnings season, earnings have been very positive. I mean, at this, without getting too quantitative into, putting too many numbers on this, we can go down a rabbit hole with that. Look, forward expectations, right? It's all about what is going to happen in the future as opposed to what happened in the past. Yes, we want to know what happened in the past. That's what the companies report. But looking ahead, right? You always look at, okay, what are companies saying about future earnings? And the good news is forward earnings expectations have been going up ever since earnings season started. Most companies have beaten expectations for the last quarter. The good news is forward earnings expectations are rising. Forward CapEx, capital expenditures, investment expectations also rising.
Good stuff there. So again, earnings season's been strong, guidance has been strong. The downgrade happened. Yes, it's in the headlines. We're not overly concerned as of now. With all of that, this is your latest Facts versus Feelings Take 5. We'll see you next time. Take care. You're downgraded.